Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. This segment is presented by Charles Schwab. I'm your host, Jill Malandrino, and joining us this afternoon, we have Kevin Davitt, head of index options content at Nasdaq, as well as Nick Smith, head of index options sales at Nasdaq. We're here to discuss quarterly options expiration and the increasing sophistication of retail investors. It is great to have the both of you with us, Nasdaq Dream Team this week. Kevin, let's start with you. Bring us up to speed on Nasdaq 100 performance, volumes, and the extent risk shifts after today's quarterly expiration.
That's a really good question, Jill. I appreciate you having me back, and like you said, I'm excited to be joined by my colleague and friend here, Nick. To your questions on performance, on volumes, and today's quarterly expiration. So the Nasdaq 100 continues to lead U.S. equity measures year to date and over a variety of longer term time horizons in price terms. So through yesterday's close, the Nasdaq 100 was up 17% in 2025. That compares to like just under 14% for the S&Ps and just less than 12 for the small caps, despite them playing catch up this week post the Fed meeting. Now, you mentioned index option volumes. I'm lucky because I get to come on your program every month, and on many of those visits, I'm highlighting new records for NDX volumes. September, that's the case again. We're on pace for the highest average daily volume in the product. The notional equivalent of about 4 million Qs options are now trading daily in NDX. I think that's a testament to the work that Nick is doing. It also speaks to continued growth in awareness and assets moving into NASDAQ 100 facing vehicles. Your last question was about quarterly expiration. Just like 3 months ago, we have a lot of notional exposure that expired this morning. Much of that exposure was rolled out in time. So just as an example of that, earlier this week, we saw a lot of volumes where positions moved from September standard options into December of this year, as well as June and September of next year, the quarterlies. That type of behavior points toward institutional risk management approaches, which I think my colleague Nick knows a lot about.
Yeah. And Nick, it is great to have you with us for the first time on NASDAQ Trade Talks. And you're recently back from the Institutional Forum New England, and you're about to embark on a handful of institutionally focused events. So, what are some of the key themes that are resonating with the data-driven asset managers that you expect to cover?
Absolutely. Thank you, Jill, for having me on. It's great to meet you. And for your listeners, you have to tune your ears to British radio to accommodate my accent. But I'm based here in the States. Been at Nasdaq for a year now, and as you mentioned, I cover the institutional audience. I think probably worth starting just with what is the institutional audience, and that covers, as you mentioned, asset managers, also hedge funds who participate directly in the index options market, but also pensions, endowments. And the whole ecosystem behind that, which covers the bank sales trading desk, the structured products, the ETF issuers. There's all different flavors of how folks access this market. And as you mentioned, I was at the Institutional Forum up there in Boston, which was a great markets group event. And at that event, a number of pensions and endowments meet and discuss themes of their investment. Pensions and endowments have to think about not only the needs of their organizations today, but also where they're going in 50 years' time. And of course, a lot of that comes down to equity investments, bond investments, but they also have some allocation to, for example, private equity. Index options and listed derivatives in general sit within this broader group that's often termed alternative investments. And that's alternative because it's uncorrelated to traditional assets. The returns of those equities and bonds doesn't necessarily correlate over a period of time with the returns of these listed derivative strategies. And that's on purpose. That's a defense mechanism and also an opportunity to gain returns and specific returns that these derivatives make available to these investors. Worth mentioning, index options as a singular vehicle is a bit like buying a house as a real estate investment. It's just one thing. Index options in real life, in these contexts, are talked about in terms of not just the instrument itself, but the strategy that these investors will use that instrument to create a particular return stream. And I would describe that as more like a condo where there's different, rental agreements, leases, terms, etc., etc. And so that complexity is what we see already expressed in the institutional audience has been for a while. That surgical precision for those return streams that then gives the portfolio that those endowments and pensions have across the market a broader and more diverse exposure. That's really the theme that we see as we talk about index options in the context of those longer term investments.
And Nick, what are you seeing in terms of high-end retail investors? Are they continuing to move up the sophistication chain?
That's definitely the case. Yep. Sorry, Kevin, you want to take this one?
Yeah, I would love, and I'd love to hear your take, but that's an area of the market that I touch regularly, and there is absolutely no doubt that individual traders have become like way more knowledgeable about these markets over the past couple of years. At a high level, I think I would attribute that to like really, really improved education efforts. So I think about the brokerage firms and the exchanges, which have done a really good job of sort of meeting prospective end users and newer end users and bringing them along with accessible education. And I think about the really robust tools that these brokerage front ends make available to their clients. That, in my opinion, is playing out a variety of different ways specific to NASDAQ 100, which both Nick and I care about. So I have a visual where we plot the growth of NDX volumes. And in that, it's in orange, and that's relative to the overall growth in index options going back to 2022. Now, why 2022? Well, daily options have been available in NDX since August of that month, if my memory serves. And that was really an inflection point for the product and arguably for retail in general. We see a great deal of focus on shorter dated maturities. We've talked about it on the show previously. Retail positioning is predominantly spread based, so we're talking about defined risk. And then I would add that we're seeing a whole lot of retail traders employing systematic or algorithmic tools in their executions. So I'm talking about people using things like time or volume weighted average price measures to kind of chop up orders. And that's stuff that historically would be approaches that Nick's clients would be seeing. But I can't wait to see, how this continues to evolve in our markets over the next handful of years.
And Nick, much attention's been paid to the proliferation of QIS or quantitative investment strategies, typically run through bank desks. How do you advocate for NASDAQ 100 exposures to those firms, and what's driving successful product launches?
Yeah, great question. Thank you, Jill. So indeed, the QIS strategy, and it has some different names depending on who you speak to, but essentially those are groups at primarily big box banks that speak to these pensions and endowments and other traditional buy side, serving their user base that the banks traditionally already have through their existence as a bank. But they're in these QIS strategies, they are offering these return streams in these more sophisticated strategies that we talked about. And I think it's worth highlighting that, of course, the proliferation of index options and what you saw there in Kevin's chart in terms of the uptick in index options growth. I mean, some of that comes from the fact that in these structures, often you have to trade both sides. You having a put spread requires two trades, and so that brings about this growth in index options. Also, the sophistication sometimes isn't just a question of like doing more of a thing. Sometimes it might be, for example, a knock in and knock out. So that could be based on a certain market condition. I'm going to do a certain thing. That could be a particular option structure. I'll do one particular option structure if volatility is at a certain level. I'll do another particular option structure if volatility. And that surgical precision and those return streams is what the end users are looking for. Now, where does NASDAQ 100 come in? Well, NASDAQ 100 is one of the potential underlyings as an index options tradable product that will form the return stream. So these QAS groups can go into pensions, endowments, asset managers and say, okay, well, over previous periods, over periods that you might come to expect over the next period, over when your stocks did this is what this strategy would do based on the complexity of the structure, and they're able to promote that. Now, depending on the underlying, is going to have an impact on what the return stream looks like. A more diversified index might do well in one thing. A less diversified index, such as the Nasdaq 100, might do particularly well in another thing. Those volatility characteristics of the Nasdaq 100 make it particularly attractive for certain strategies. As mentioned, there's some that work better in broader indices. Sometimes it might be that a strategy that is designed to provide a return in the event of a equity market shock in a monthly period might actually be better suited for a less broad index for a weekly period. So it even comes down to time periods as well. And so Nasdaq 100 as a underlier is a increasingly prolific underlier for these QAS strategies. And some of that comes down to the availability of liquidity in the underlying index option, which we've seen a great improvement in over the last year.
And Kevin, what types of option strategies have likely been rewarded in recent weeks and months? And are there any concerns that the tide may turn as we go into Q4?
Oh, I wish I could answer that definitively. I'm going to have to paint with a broad brush and sort of just focus on understanding as opposed to any specific strategy. But the past few months have, and Nick sort of alluded to this, have generally been kind of a low volatility grind higher. And overall, in that type of, or against that type of backdrop, positions that are short volatility should have performed well. And there's a variety of ways to sort of express that overarching view. If we were to look a bit more broadly and take kind of more of an institutional focus, one of the topics that I'm sure Nick is going to hear about in his overseas travel is dispersion trading, which has likely performed really well of late. So I have one other visual, and it has to do with realized correlation within the Nasdaq 100. Now, like other kind of volatility measures that we talk about, your time horizon is going to matter. In this case, we're looking at 3-month realized correlation within the NDX. That particular measure, as of today, is at a 5-year low. And the only comparable period was in 2017, which was a historically low vol market. This is something that I wrote about on my NASDAQ author page if you're interested in diving a bit deeper. But sort of distilling it down, when realized correlations are low, you might expect a dispersion strategy to perform well. They have proliferated in recent years at bank desks and elsewhere. It's an interesting dynamic. At some point, correlations, like to your last question about looking further out, at some point, correlations will increase, and that will likely coincide with market weakness. But right now, the markets continue to kind of grind higher, driven in large part by the names that power the NASDAQ 100.
Yeah. And finally, Nick, now that you're new to the show, we want to learn more about you. And I understand outside of work, you're actively giving back to the Miami community you've been part of for years. Tell us a bit about your efforts to that end.
Yeah, absolutely. So I've been in Miami for 7 years, and in my first year here, I didn't have a visa, and I volunteered at the local church for the hurricane relief because Hurricane Dorian hit the Bahamas. And after that, there's a food pantry based at that church that continued to ask for my voluntary services, which I was more than happy to provide. So I'm currently co-director of the Coconut Grove Crisis Food Pantry, which is a food pantry based here in Miami, and it's a wonderful organization that gives a weekly distribution of food to 250 households here in the Grove. I've been involved in a number of ways, logistical planning and also fundraising. And we have an endowment for the pantry that I'm involved in, helping to make decisions for the management of that endowment. And to bring it back around, although it's on a much smaller scale than the endowments that we talked about earlier, who are present at the institutional forum. In fact, we own an ETF that uses options designed to generate income while providing growth, and that just shows how the sophistication available historically to institutions is now also available to endowments such as the one for my food pantry here in Miami.
All right. Your civic work is just as impressive as your work here at NASDAQ. Thank you for everything you do. And thanks to both of you for joining us on NASDAQ Trade Talks. I'm Jill Malandrino, Global Market Reporter at NASDAQ.